metal boys are leading the charge on the downside. Hindalco, Sterlite, Tata Steel, all of these are down in the session today, so it's not looking very good for the markets. Pull up the Nifty picture for you and show you what we're doing. 212 points down for the Sensex, the Nifty down close to 70 points, 5084. It's not shaped up to be a very good afternoon. Some weakness. Even the broader markets have come off quite a bit. Pull up the European picture for you, the Dow futures as well. Not severe cracks that have come in, so there has been some bit of, the rumor mills are agog, of course, with a number of number of rumors on the political front as well. Maybe that is lending to that bit of a pressure on the index, but yes, it's not a global thing that is really happening out here. Sure, we could have bargained for a lot more from the ECB yesterday, the comments that came in, or even from Ben Bernanke. That didn't happen, so it was a non-event of sorts, and we kind of coped up with that in the first half of the trading day. The second half hasn't been too good, and as I said, a number of stocks, the high beta ones are leading the charge downside, and of course what is also participating are some heavyweights like Reliance Industries and Infosys, which are down to 2.5% apiece. Add to that State Bank of India, and you have a potent cocktail of a lot of heavyweights plus high beta names correcting in session, which would lead to the kind of cut that we've seen on the index. So yep, probably could have hoped for a better afternoon. That hasn't come about.
Yeah, a bit of a step back is the best way to perhaps define the market situation. Bring up the 7-day chart, because after last week's truncated week of trade, we've had 5 straight sessions, clearly scaling past 5100 and then retracing below that mark. So we haven't been able to hold on to that level, and that pretty much sums up the weekly performance to just a 1% gain as we continue to see unwinding pressure at around about 50-80 odd levels. Ashwini Gujral and Mitesh Thakur join us with their perspective of trade. Rajnish Kumar of Fullerton Securities joins us with his views on the markets as well. Good afternoon to all three of you. Come to you, Ashwini. This unwinding pressure, I mean, if you were holding a long position, you would recommend unwinding as well?
See, yesterday at the end at 51.50, the advice was that you reached levels from where declines could start. So there's no question of holding long positions. If you are, as far as I am concerned, once we start closing above 5080, the uptrend is over, because if you draw a trend line from 4720 through 4950, that kind of ends up, right now around 5080. And we shouldn't be comparing ourselves too much to the US market. They'll get QE, they'll get a jobs package, or we'll get our rate hikes. So chances are that we start underperformance going into next week because of RBI policy, etc. So chances are that this pullback after doing about 50% is now over. And on stock specific, you can go short on Hindalco with a stop about 161, target about 135. OBC you can sell with a stop about 320, target about 290. Tata Motors can be sold with a stop about 780, target about 730.
Okay, just add to that the Bank Nifty call that was given yesterday. When the market was indeed in a bit of an uptrend, Ashwini did suggest selectively buying, selectively building up short positions in the Bank Nifty. That has corrected 160 points in trade today. Good going. And Mitesh, I want to come to you with a very uncanny characteristic. The last 5 days that we've done closing trades, you and Ashwini have at least 2 calls which are in common, and in today's session as well, both of you are bearish on Hindalco. So that one is, of course, one of you on that. And of course, what do you sense on the Nifty now? Could there be further slippages, and can shorts be carried forward in the next session as well?
I'll start with the Nifty first. Very clearly, I think, yes, again, we had a lot of people at technical consensus that around the 5,200 mark, give and take 30-40 points, you will see some kind of at least a short-term peak, if not the end of this rally. I'm still not very clear whether the rally has ended or not, but at least we have seen a short-term high being recorded over there. We have seen a good amount of supply pressure coming from those levels. My first, levels which I was watching on the downside were about 5050, 5030. I think Nifty has today made a low around those levels. 5060 is the intraday low. So I think we have completed the minimum decline which we were expecting from 5200. Now I'm not very sure whether we are going down further or not, but a good part of that answer would depend upon whether we start trading below 5030 or not. So once if that happens, probably I'll be skeptical and probably even take some more aggressive bearish positions. For the time being, we've had first decline. So in case the trend has got some kind of strength left, you might see a weak pullback. If there's a weak pullback, you might go back to 5200, 220 odd levels and then start declining again. So as of now, I'm not very clear, as to where we are heading. What we can probably draw out in the short term is that 5200 still remains a very formidable level to cross. So on the upside, I think if you want to short, the best type of short is above 5250, 5280. That's the kind of 5150, 5180 is the kind of range where you can initiate short positions. While on the downside, as long as 5030 is holding out, there is a good chance of a pullback. So probably you might just get into some kind of consolidation within this range, or you might get a signal of a breakout or a breakdown from this range. Today I'm not very clear about as to where we are heading, but I think we have completed a good part of rally. Upsides from 5200 would be extremely limited and capped. So I think it doesn't make sense going aggressively long above 5150, 5180 odd levels.
Rajnish Kumar also is with us. Rajnish, okay, Rajnish, can you hear me?
Yeah, I can hear you.
Okay, great. Rajnish, hi, afternoon. Thanks so much for joining in. Today is probably the first day of a meaningful correction after 5 or 6 or 7 days of rally that we have seen, and the broader markets have performed well as well. What do you do right now? I mean, would you stay with longs, or were you not long in the first place? What kind of trades or positions are you taking right now?
Yeah, when we look at the market at the current levels, and especially if you look at the levels that it was at even a week or 10 days back, we think this is a very attractive level for a long-term investor to get into. But then there are two forces in play very clearly. On one hand, you find India in a situation where we seem to be at the fag end of virtually the fag end of the rate hike cycle, and probably things will only get better from there on. Maybe another 50 bips, and probably that's it, is what it looks like to us at this point in time. And with crude, gradually coming down, with commodity prices, of course, being fairly resilient, but still decidedly on the way downwards. So these are all good news for India as an economy. And if we are going to come out of all this with our growth practically intact at about 7.5 to 8%, then that to my mind is brilliant news. But on the other hand, you've got acute fear of something dramatic happening in Europe, and US having a very prolonged recession. So I think what is happening is that, given the basic strengths of Indian market, there is a natural tendency for people to get in and buy. But then whenever some strong bad news comes from Europe or US, we see this kind of a pullback driven by acute fear. So my sense is, if you're a long-term investor, if you have a horizon of at least a year, then stay with the market. And you probably will regret it a little later down the line if you don't get into the market with good stocks at this point in time, because you'll not get these valuations later. So that's the outlook that we have. But then it's going to be volatile, because market will react to global news. So one has to be able to take this kind of volatility in one stride.
All right, get in some more strategies. And Mitesh, even you have a recommendation on Hindalco this afternoon. Both you and Ashwini are recommending a sell there. GVK Power is a buy.
Correct. Hindalco has been looking weak. We've seen for the stock price, I think, it seems like the rally is over and it will go into some kind of corrective mode. So the first target which I'm looking at is about 140, 141, and that's the price target in 157, which is where some kind of moving averages are placed on the intraday chart. I think would be a very, very good stop loss over there. GVK on the other hand looks very similar to the chart of what Lanco was a couple of days back. I think at around 17 and a quarter. I think very clearly after a big decline, there are signs that a temporary bottom might have been in place. So while today, you might see the stock being subdued, but I think that this is one stock probably which could surprise on the upside. Not much, but because of the price decline which has already happened, but about 7-8% rally to 19.5 looks very much likely over here, and 17.40 should be a good stop loss over here.
Watch out for GVK Power. Yes, indeed, could go up. But remember, Lanco was another call that Nitesh had given, and it hit its target price as well. Ashwini, we are unofficially crowning you as the king of the Bank Nifty, the calls that are coming in, and which is why I want to get a call today for the Bank Nifty. What does one do after that 160-point drop that we've seen?
I think it's time to take short positions again. You've seen a good 1,000-point pullback, and a lot of things have reacted from their 50% retracement levels. So has Bank Nifty, and now you have a clear stop. The highs of Bank Nifty were about 99.60 odd, so that becomes your stop loss, and you have space open all the way back to levels of about 9,000. So it's a good risk reward trade right now to get back into shorts for the Bank Nifty.
Would you concur? And the reason I'm asking this to you is because you were fairly bullish on State Bank of India in yesterday's session. On individual stocks in the banking space or the Bank Nifty, what are the kind of trades that you would take? Bitesh, I guess you couldn't hear me. What I'm asking you is because you had a call on SBI yesterday. I'm just wondering if on an individual stock in the banking space or the Bank Nifty, is there a call that you have as well?
Well, on the Bank Nifty, I don't have a call really, but on the State Bank of India, again, I had a bullish call which has been stopped out. So I think probably yes, I think, we have seen, I have a negative view on Allahabad Bank in the short term. A couple of PSU banks which are looking strong are just kind of getting subdued. So maybe yes, we'll see some declines in Bank Nifty, but I'm not sure as to how much because I don't really have a call over there.
Okay, the two stories that played out in the market this afternoon were GTL and GTL Infra. The flash report on debt recast has been accepted by bankers as source-based information that was broken on the channel exclusively. The stock has had an unprecedented move, 35% in today's session. That's GTL for you, and GTL Infra 14% on that one. Given that this would mean perhaps a fundamental change if it were to come by, and the timeline has been laid out over the next 2 to 3 months, Ashwini, you think you would perhaps want to relook at GTL and GTL Infra?
If you saw this stock falling from 400 to $100, it's a manipulative stock, and this kind of news you don't want to get trapped into it. If you have it, it's a good time to exit the stock. You don't want to be in stocks which fall 75%, go up 35%. There's no way of analyzing these sort of companies unless you're an insider or a person very close to the company.
It's a fair call. Okay, the other set of stocks which are leading the charge down today are the metal boys. Some downgrades coming in for all the metal stocks, particularly Hindalco. Rajnish, what's the sense here? The base metals, maybe not the steel companies, but the base metal companies, what would you do with them? They've corrected a bit, maybe a bit of a bounce back has come about, but would you sell into the strength if at all? Would you liquidate your positions in the portfolio or would you stay put?
See, metals we are quite negative at this point in time. With this, metals are driven largely by global factors, and the whole global manufacturing environment for metals is not looking very positive, and we believe that metals have while one keeps seeing some bit of resilience and they sort of keep bouncing back to some extent after some correction, but we feel that it's steadily on its way down, and that's going to be negative for metal companies. So as of now, I think we are better off staying away from it, and I would rather liquidate and wait for it to correct further and then pick it up at some point in time when probably it's bottoming out at some point in time.
And just sticking to the commodity space before we take a break, Ashwini, I just want to come back to you. The cement stocks, we were talking about them the last 3 days. I remember a call yesterday. What do you do with an ACC and in particular an Ambuja Cement?
To move towards levels of 120, which is the bottom end of the range. So that's where the risk reward really gets into your favor. if you buy around 145, this is what happens. It falls 5-6% for no reason. Yesterday a price hike was expected. Today probably people are not expecting a price hike. So these stocks have set levels. So ACC 940, 950 are the levels where the risk reward comes into your favor. Ambuja around 120. So either you buy them there or you just leave them, because they are not in any kind of trending frame of mind. So you cannot expect that after 6% you'll get another 6% or another 10% on the upside.
Okay, gentlemen, stay on. Lots more to talk about. Lots of stocks, in fact, correcting as we speak from the broader markets as well. We'll talk about all of those in just moments from now with our experts. Here out in the meantime, Rajnish Kumar, MD of Standard Chartered Securities, as he suggests a stock and sector-specific approach for the markets and believes that India might be able to absorb more FII flows vis-a-vis other emerging markets.
Well, it is, I think, in the course of the market, whether it's up or down, you will always have periods of corrective actions in the market. I think what we are seeing is a corrective action when we were on a downturn in the market. The important thing to focus on is we have some pretty deeply entrenched issues which have to be taken care of on the macro basis, which is that the rate you could have one or two more rate hikes in the Indian context, as well as the investment cycle has not yet bottomed out. So you could have that playing out over the next 3 to 6 months. Approaching investment in this market is firstly recognizing the fact that investment cycle will take time to bottom out. Interest rates may still have another 25-50 basis point higher to go in terms of policy action. With that in mind, I think we can focus on certain sectors which might have already seen the negative part of their evolution. So we can be sector specific and stock specific, and that would be the strategy to adopt to outperform this sort of a market. I think global liquidity on that point, I think we are positively placed in that sense that like when you have periods of extreme action or volatility, clearly that time we've seen outflows, but in general I think India is pretty favorably positioned as far as ability to attract the global liquidity, whatever is available for emerging markets.
Welcome back. You're still watching Closing Trades right here on ET Now. Let's talk about some of the commodity stocks that have been active. I mean, steel, of course, unanimously across the board has been seen unwinding pressure. So you have the likes of Tata Steel, Jindal Steel and Power, even a SAIL for that matter, that have looked weak. Hindalco, as both our technical analysts suggested, is a sell recommendation, down about 5% for that. Cement is the other one where you're seeing a strong correction. So Ambuja is down about 6%. You have the likes of Grasim's also witnessing selling pressure. Reliance Industries, incidentally, not as much of a fall, but still around, down about 2.5%, but still finding some comfort around the 830 mark. Rajnish, what is the recommendation from the oil and gas space? Given that there's not been much talk about that sector on the back of the lack of news flow. Of course, ONGC, the FPO is going to be the big trigger end of this month. But aside of that, how would you be approaching stocks there?
If you look at ONGC, if you look at oil and gas, let's first look at Reliance Industries. Reliance Industries has corrected quite a bit, and of course it's now in the midst of some bit of negative regulatory and CAG news. That's rather more of CAG news. But if you look at the fair valuation of the company, and if you look at the target price, even the consensus target that the street has on Reliance, it's still quite stable, and at these levels it does look like a company which will give you fairly good returns. So I'm not very negative on RIL in spite of all the news that is coming its way currently. So it does look like a good buy, and we have had a buy recommendation and we continue to have buy recommendation. On the other hand, if you look at companies like ONGC and oil marketing companies, while we are not hearing too much about them, but this is a good time to get into these companies because see, oil prices are, and especially if you look at the difference between the Brent crude and the NYMEX crude, the difference has been huge and largely driven by the Middle East crisis and the Libyan crisis. Now that has to narrow down at some point in time. So while there are no triggers yet, but if you are an investor, it's a good idea to get into this because the moment crude prices start going down, the oil deficit obligations of oil marketing companies will go down, and all that will basically it suggests that going forward the valuations will improve for these companies. So we are fairly bullish on oil and gas, and of course you need to be a little patient because things are not going to play out in a hurry right now. But if you are patient, I think it's something which can pay off well.
Just wondering, Mitesh, if I'm not wrong, even you had a sell call on some of these oil marketing companies from a trading perspective. Sure, Rajnish likes them from a long-term perspective. From the near-term trade, in the morning, if I'm not wrong, you had a sell call, 361 for an HPCL. A couple of others have gone down as well. What do you do with them now?
No, I think they remain sell. ONGC, I think FPO pricing could be a big issue over there, and we have seen the stock break below critical level of 260, 264, and I think it's just doing nothing but practically trading sideways. Typically these moves or these consolidation act as a base where the continuation takes place. So I suspect that unless until ONGC manages to trade about 268, 270, I think this will be this is one stock which will remain under pressure and probably head towards 240, 230 and could give some kind of short-term pain. HPCL, BPCL on the other hand, while crude prices have come down to a certain extent, but I think Brent crude is the one which is worrying them more. But I think that apart, technically they've broken below their key levels. HPCL, if you see, was consolidating nicely in the range of about 375 to 395, is broken below that and clearly given a sell signal. So 350 was the short-term target over there. BPCL has been falling for last couple of days. We have been negative on that. In the short term, I don't think there's kind of any positive news for these stocks.
Okay. Jubilant Foodworks is down to 910 now, so that call is working all right. What saw short covering was part of spot covering was Bata India. After touching those 70 kind of levels, it's bounced back to 692 odd. So that one has done well in the trade today. And the other one is Titan Industries again, which is holding out in trade. Ashwini, Jubilant we've discussed a lot. What about Bata India and Titan, because there are some calls coming in on Titan as well for maybe a shorting recommendation at the current levels. What kind of trades would you do on these?
So Titan is a different case from Bata because Titan generally does well in the festive season. So probably Titan is still a buy. Bata was kind of a 2-3 day type short. So that has worked out till 670. I think Bata is trying to retest levels of 705, 710. Once this retest is complete, maybe Bata will see lower levels again. So on these stocks, you should be very careful of trying to go long now because at higher levels, the kind of volatility they are seeing is clear that some people, some stronger hands are booking profits, and this sort of action is often a distributive kind of action where smaller guys get in on rallies and the larger players get out whenever the stock gets to its all-time high kind of levels. It happened with Jubilant 2 or 3 times and then finally it started coming down. Similar kind of thing is probably happening in Bata, but Titan is a different story. Titan could move higher.
Jubilant Foodworks in the session down about 1.5%. Ashwini, of course, had recommended a sell on Jubilant Foodworks in the morning. Also on Bata India. Titan, incidentally, is holding up about 1.5%. Looking some more stocks in the session at this juncture, which are not doing a whole lot. There's a Tata Power as well, which is looking a bit weak. Reliance Power is down about 2.5%. You also have some of the pharmaceutical names which are reeling under pressure, down about 2.5% for Sun Pharma. Bring up Ranbaxy as well. After yesterday's rise, the stock has not done too much in today's session. 0.25% gain coming in for that one.
All right. In fact, that's kind of come off from the highs. So just about up in trade. Rajnish, one final word from you. What is it that you would do in a market situation like this now? I mean, you gave the broad synopsis, but is there a deep value zone that you've come across right now? You buy those pockets or that particular sector and hold it for maybe 6 months to 9 months, a large cap money making idea if at all?
Yeah, Abhi, the market has interesting opportunities at this point in time. If you look at, for example, telecom space, this whole 3G story, which had sort of till about some time back didn't look so exciting, is now sort of playing out quite nicely. And players like Bharti, Idea, we think are going to gain quite significantly from there. We should see some, these are good companies to buy into at this point in time. If you look at pharma space, of course, valuations are quite rich, but even there are companies which look even at these levels quite attractive. Something like a Lupin I would buy at these levels. If you look at infra, for example, let's say something like IVRCL, which has corrected so dramatically and has still got some very strong headwinds coming its way. But look at the valuation. I mean, at these valuations, it's definitely a buy. So what I'm trying to say is that there are some sector-specific stories, and there are certainly some great value buys in this market. And I would think that this market gives you fairly good opportunity to get into stocks which are slightly long-term. But yeah, I think the caveat is, because of this whole global environment, we'll keep seeing downward pressure in the market. So one can't expect very quick returns in this market. One will probably need to be a little patient and hold the stocks for some time.
Okay, take a break. In fact, Rajnish, thanks so much for joining us today and giving us your perspective on this leg of closing trades. Take a break on that note. Come back and talk to, we joined by two more experts, Vijay Bhambwani on the technicals and Jagdish Malkani on the fundamentals.
All right, in the meanwhile, hear out some more market opinion on the road ahead, especially on what the banking space is expected to do in the near term from India Infoline.